2012 has certainly been a tumultuous one for gold miners. Deadly strikes, above inflation wage increases and maturing reserves coming to plague the industry. And with gold output falling 45.7% in October, many are questioning the longevity of South Africa's 126-year-old gold mining industry. CNBC Africa's Panashe Chigumudze investigates.
South Africa's gold mining industry has come under scrutiny recently, with many calling it a sunset industry. Nick Holland, CEO of one of the largest gold mining companies in the world, has repeatedly sounded alarm bells.
Look, what's clear is that if we continue on the same trajectory as the last 5 years, in other words, around a 5 to 7% per annum decline in production, with costs going up between 10 and 15% per annum, anyone can work out that trajectory is not sustainable for the industry.
The grim outlook for gold miners has been supported by a series of reports by Standard Bank's David Davis, allaying any thoughts that this is merely scaremongering from the mining houses. According to the research, at least 6 large South African mines, which currently produce around 2.1 million ounces of the precious metal annually, have entered the mature declining stage in their useful lives. These include the mines of Goldfields, AngloGold Ashanti and Harmony Gold. The report also states that key pressures on mining cash flows include the gold price and operating costs. According to Davis, the direct relationship between reserves and production has spelled the decline of the gold mines, and he notes that this is not a South African phenomenon. Independent research by Stanlib's mining analyst, Kobus Nel, also suggests that the decline is inevitable.
It is a sector that's in structural decline, unfortunately. We've seen it over the years, how production out of South Africa relative to the global context have been shrinking. And there's some of the mining areas, obviously, that's more prone to that, that you are seeing a sharper decline in reserves than others. And there's some of our SA mines that are actually in expansion mode, where they're actually ramping up in terms of volumes. But generally speaking, as a whole, it looks like a lot of the low-hanging fruit have been picked, and it is getting more difficult.
Nel was, however, bullish about the immediate future of the gold sector.
I think at the moment, most of these mines are making good cash flow. Obviously, this last quarter of 2012 will be a tough one, given the strikes and all the volumes that have been lost. But I think looking into next year, these companies are, at the current gold price environment, are still sitting at relative good margins. But I think generally speaking, the investment community is not expecting that these gold prices will last forever.
The Department of Mineral Resources was not available for comment, but when interviewed post-Marikana, the minister acknowledged the challenges facing the sector.
In 2010, as the mining sector, we came together and say, what are the weaknesses? What are the blockages which don't allow the mining industry to grow? We identified infrastructure, electricity, high cost of electricity, road, rail. For the first time, where government comes on board and say, wait a bit, if we want to see mining contribute positively, we must help them.
Key stakeholders are working hard to avoid an early sunset on the gold industry, and solutions include selling operations, downsizing or spinning off South African operations.
We got to remain globally relevant and competitive against the global peers. If that is not the case, we are going to become more and more marginal, and over time perhaps irrelevant. And I guess that's important to understand. So if you look at the pie in any company, and in the mining companies as well, you obviously sit with shareholders, you sit with your employees, you sit with your regulatory authorities, and then I guess the government in general, in terms of taxes and other benefit it actually get out of the mines. And I think that the realization should be there to try and maximize this pie.
Whether the mining houses take the decision to restructure or downsize, it is clear that it is no longer business as usual for the gold miners. All stakeholders must act decisively and quickly to ensure that value is preserved, not only for shareholders but for the wider economy as well. Panashe Chigumudze, Johannesburg.